How's it going, everyone? It is Andre Williams, and we're going to be going over AMC and GME. Both of these stocks ended up having a great day in the market, and it's something that we need to bring some attention to because we're seeing that there's a lot of volume and there's a lot of demand, which we should not be surprised about. So like we normally do, we're going to be doing the technical analysis for both of these stocks, and then I'm going to go through some recent news in regards to GME, as well as going over the short interest, which I saw on fintel.io. So let's get into those videos and I'll give you guys my final thoughts afterwards. All right, so we're going to be doing a technical analysis for AMC. So what we want to talk about is AMC was up 21.29% on the day. Great performance we saw. As you can see, we had a low of the day around $8.95, and we ended up having a high of the day at $11.32, as you can see over here. So just seeing this particular type of movement was great, especially from both of these stocks that have a lot of volume and a lot of demand. And there's also a lot of a sentiment behind it in regards to actually being a part of a movement. But anyways, as we move on forward, we can see here inside the pre-market, we end up having some support going into the open, which is what I really like seeing right here at this $8.87 area, or we can call that $8.85. You know, this is rounded off, go in the middle. So we can see right here, that's no stranger because we were in this particular area yesterday in the after hours. So seeing the strong move, you can see right into the open. We end up having a nice move. We end up getting to this resistance area here right at $11. So anyone who was able to catch this movement, this was definitely a good look for you. But one of the things that I want to take a look at here, we can see this $11 area was definitely a serious area of resistance as we go across. So going all the way from 11:25 a.m. going all the way into the close, it's definitely an area of resistance to pay attention to. So it ended up breaking through it as we started getting closer to the end of the day, but it's also one of those areas that we want to see hold up. So if AMC can finish above $11, that would be great. Even if it does finish around the $10.95 area, I'd still be bullish and be looking for an upside movement coming tomorrow. So one of the things we want to take a look at as well, what was another support area that we want to pay attention to? So this support area to pay attention to, which I'm going to be looking at, is around the $10.60 area, and also the support, seeing if it holds up around $10 and this 90 cents, sorry, $10.95, $10.90, preferably to hold up, or even holding up around the 50-day simple moving average. It's staying above that will still indicate a bullish trend. So let's take a look quickly at the 5-day 5-minute so we could see what it was looking like in the prior days. So this is part of the reasons why we're definitely looking forward to seeing AMC make that push, reclaiming back to that 12 spot. As we can see over here at $12, this is an area of resistance. I would love to see AMC pass, because if it does do that, then we can look forward to a move up to $12.50. And now let's take a look now at the 3-month 1-day chart so we can look at the overall trend from far. So as we can see here, doing a great job staying above that trend line. And the best part about it is, remember yesterday we saw it fall below here. Now it's reclaiming, coming back to that trend. So that's part of the reasons why we are seeing a bullish movement. So by looking at this candle right here, we could definitely see once we pass this resistance area of $11.47, we could see a strong move going to 12. And that's why I was giving you my prediction on the previous 5-day 5-minute chart. What we want to take a look at, if it ends up having a bit of a gap down, even going down and being around $10.60, or just staying above the $10.57 you see here, that's still not too bad either. But for the most part, very impressive day for AMC. All right, so we're going to be doing a technical analysis for GME. So it ended up having a monstrous day inside the market, being up 52.69% on the day. We ended up seeing a high of the day at $187.50, which you could see right over here. And we ended up having a low of the day of $116.90. So quite the move overall. Congratulations to anyone who was trading this on the day, especially if you were able to get in on the low. So we can see right here where we're getting to the end of the pre-market. We have some support in this area of 120. 120, which we already know from all the videos that we have been doing. So the fact that it was able to hold down the support and then going into the open, we end up hitting a strong move where it ends up hitting this resistance area here. Let's just call that around 140. Ended up breaking this area and it just continued a bullish pattern. We end up having this resistance here for a short while around 170. As you can see, we went right through that, ended up testing a high over here at 179. Ended up coming back down again. And the thing is, we're doing a great job riding this 21-day EMA. I hope you guys are noticing this. So we end up getting past that previous resistance level and then end up reaching all the way up to $183 once we broke through that 180 like I was showing you previously. So one of the reasons why we need to be taking a look at these particular areas, because these are psychological levels. So if we see it past 175, we can expect a strong move going to 180. So let me just open up the calendar a little bit. And when we open up this calendar, you start seeing, especially as it comes closer into the close, we start having a movement to the upside. And when this tends to happen, we can get a nice spike that goes right into the after hours, which we see here is at $190.33. So what it's looking like right now, I would love to see GME finish above the 21-day EMA, which you can see here. It's at 179.56, but let's just call that $180. Because one thing that we can look forward to, we can look forward to seeing a gap up for tomorrow and seeing GME reclaim back that 200 area. I could definitely see that happening considering the bullish trend that we saw from it today. Now the next thing we want to take a look at is a 5-day 5-minute, and this is part of the reasons why I'm definitely looking forward to seeing GME get back to this support area that it has at 200, because if we look at the past 5 trading days, even if we move out the calendar even a little bit more, you can see right here we have a ton of support there right at 200. So I'm definitely looking forward to seeing GME reclaim that. And if you look quickly now at the 3-month 1-day chart, so we were looking at this yesterday and we saw that GME ended up breaking the trend that we saw here right at the 21-day EMA line. But look what's happening. Since it rebounded right straight off that 50-day simple moving average, now we're finally caught back up and we're back on trend. So this is part of the reasons why I'm looking forward to some more bullish behavior. As you can see here, 200 is that resistance area. Once we get past that 200 area, then we could definitely look forward to seeing 210 and making moves from there. So that's kind of give you an idea as far as what to look out for if you're thinking about getting into GME, whether you're swinging. You guys already know I'm already holding a share already to support the movement, but I do some swings so I can make some extra profits, of course. So if we end up pulling back, let's say hypothetically we end up pulling back, we'll definitely see retesting of an area between that 150. So if we end up pulling back and we get to 150, I'd like to see a bounce right back. And if we don't end up doing that, you guys already know what the upside potential is. All right, so we're now on fintel.io for GME. So we want to see what's been happening with the institutions as of late. Have they been showing interest in GameStop? So as we go down the page, green rows indicate new positions and red rows indicate closed positions. So as we can see here, and this is going back all the way from March the 19th, we've had some institutions that have put in new positions. Most recently on March 25th, which is today, we had JP Morgan that put in a new position. We also have Sun America Series Trust, and we also have Pace as well. So these are some things to keep a look at, but also just seeing as far as the activity, look at this right here. So we definitely see that there has been some interest being shown by institutions in GME. And again, this just adds to the bullish nature that we can continue to see in this stock. We also want to take a look quickly at the short interest. So if we take a look at the short interest currently from fintel.io, we have a short volume ratio of 25%. As far as short shares availability, we only have 150,000. And as far as the borrow fee, fairly low at 0.75%. But as you can see here, if we compare from the 23rd and then we look at the 24th, the short volume ratio has gone up. So we're going to go over this article quickly on the Motley Fool. Is GameStop stock a buy? The video game retailer is still a favorite of traders, even as hedge funds bet the stock will fall. GME has become an interesting company beyond its Reddit rally. Although that seems to be the only thing people care to talk about, the video game retailer is facing what not too long ago looked like insurmountable odds for its continued viability to be assured, but today there's a good chance it will not only survive, but thrive, changing how business is done. The challenges confronting GameStop are as well known as the massive short squeeze that catapulted the retailer to everyday traders' must-trade list. The video game industry is rapidly transitioning to a model that's digital and online, and where the need for physical media no longer exists. Although some gamers prefer to have a hard copy of a game, it's inevitable that the industry will one day be almost entirely online. A retailer with over 4,800 stores whose stock in trade is the trade-in of older copies of video games for newer ones is something of an anachronism, as its days are seemingly numbered. Of course, we don't know how bad those numbers are for GameStop anymore because it stopped providing them to investors a year ago, indicating that even it realized things were going to look very ugly. Yet, let's not forget GameStop entered into an unprecedented agreement with Microsoft last year to share the revenue generated by sales made in the Xbox ecosystem in exchange for use of Microsoft's back-end cloud-based services. While we have no idea how large that revenue opportunity is, it does speak to an avenue of sustainability for GameStop in the digital future. There are other channels of growth too. A chance to transition. The video game console market, both used and new, is a potent sales driver, so even though games are pushing further into digital, gamers still need consoles to access them, and GameStop is the go-to retailer for that. Currently, demand for the latest consoles from Microsoft and Sony is outpacing supply, and early on, there were extreme shortages. Now they're helping the retailer to dramatically alter how it grows sales. In its just reported fourth quarter earnings, GameStop said global e-commerce sales surged 175% and represented 34% of total sales for the period ended January 30th, a near threefold increase from last year. The COVID-19 pandemic is showing the retailer how its online business can carry it forward, even as a large percentage of stores were closed, particularly in Europe, as it has for a lot of retailers. This is part of what the activist investor and board of director Ryan Cohen had in mind when he urged GameStop to become the Amazon of gaming and to de-emphasize its stores. He's called for the retailer to shed all but its most profitable locations as it transitions to an online-focused business. GameStop Reimagined. Cohen and fellow activist investor and board member Kurt Wolf, the founder of Hacia Capital, who has been calling for change at the GameStop back in 2019, were appointed to serve a new committee to explore the best way for the video game retailer to make the transition to a tech stock. Cohen, through his RC Ventures, owns about 13% of GameStop stock. He also got GameStop to hire its first chief technology officer, poaching an Amazon.com executive for the post, as well as another Amazon executive to head up the retailer's e-commerce fulfillment centers. And they also just named a new chief operating officer who also came from Amazon. And though Cohen has called for a vast shrink of GameStop's footprint, he's not saying it needs to be an online-only store. It's a physical store, can still serve as a place for gamers to try out all the new gear and games before buying them, hopefully through GameStop's online store, as well as a meeting center for gamers, particularly for the esports events GameStop was just involved with prior to the pandemic. But it also needs to become less dependent upon the console upgrade cycle, which is part of GameStop's intent on transforming into a customer-focused technology company that delights gamers. This fiscal year, the retailer promises to improve customer service, expand its product lineup to include things such as monitors, game tables, game TVs, and an addressable market 5 times larger than what it offers now, and improve delivery speed and service through a modernized fulfillment operation. In keeping with the focus on the industry's digital future, GameStop also says it will leverage its digital assets, such as its monthly video game magazine, Game Informer, as well as its Power Up Rewards member loyalty program. It may be a physical retailer at the moment, but it intends to increase its market share in the online gaming world. It's game on. So while billionaire-led hedge funds are still shorting GameStop stock, it's on the basis of its current valuation, which appears to be all out of whack to fundamentals and not on the prospects for the business. GameStop is also mulling over whether to dilute existing shareholders to capitalize on the continued elevations of its stock price and demand for its shares. that could create near-term weakness, which means I'd argue GameStop stock is a buy, but only after its shares finally move past this alternate reality they've been operating in. That time is not now, but there is good reason to believe the video game retailer still has plenty of game left in it. So for my final thoughts for GME, I must say I like what I'm seeing, and we can see there's continued volume and demand for this stock. I also like what Mr. Cohen is doing. He's pretty much saying, hey, I'm going to shuffle up this whole management team because I want to make GME the Amazon of the video game industry. That is huge, and that is such a crazy outlook when you take a look at how big Amazon is and what he's trying to do. We've already seen where he's brought Chewy already, so this is definitely giving confidence for a lot of investors. We're also seeing a lot of analysts are starting to upgrade their price targets for GME as well, so that's also adding even more to the bullish behavior that we're seeing. So will GME end up getting back into that $200 range? I'm saying this with high conviction. Yes, and I'm looking forward to it. As well as for AMC, we already know this is a big time post-recovery play with everything that's going on. When things go back to normal, people are want to go back to the movie theater. So seeing AMC get beat up previously, just like GME, there's no surprise that it was able to rally itself back to where it's at currently right now. So as far as how I'm looking at both of these stocks, you guys already know it doesn't change that much when I do these videos. I am still bullish on them. And especially with GME, it's actually great to see. I am a part of the movement as well. Seeing that this stock was beaten down so much and now it's at a level where we have analysts saying, well, you know what? It's worth at least $175. Like, this is great. It's like I said, I'm very, very proud to see this. I shopped at GameStop many times when I was really deep into video games and so forth. So yeah, this feels good about this. I'm excited about this, excited for the future, especially for both of these stocks, especially AMC. I want to kind of see how they transition in regards to actually getting out of this pandemic that we're in. What changes are we going to see? How are they going to improve the current setting as far as what they offer movie theaters and so forth? But yeah, I look forward to it. Also, I want to put in the disclaimer. I'm not a financial advisor. This isn't financial advice. So just know when you do invest, you're doing it at your own risk. We'll talk soon.